Hello friends, welcome back to my YouTube channel. Today we're going to talk about how I traded during this week. That is from 2nd June 2025 to 6th June using my strategy. I'll also be guiding you step by step on how to analyze the market in the process. So sit back and enjoy the video. And kindly, don't forget to like the video, share and hit that subscribe button to get notified whenever I'll be dropping some content for you guys.
The strategy which I use on a daily basis is called the ICT and the CRT candle range theory. So if you don't have any understanding of the ICT or the candle range theory, kindly comment down below so I can do a detailed video on everything concerning the strategies. And without further ado, let's head on to today's video. Okay, so I'm going to start my analysis in the DXY as always. We are in the weekly time frame, the US dollar index chart, as you can see on the top left of the screen. We have this fair value gap here, which price has respected recently, and then it formed a very big bearish candle during this week, indicating that this price is indeed willing to go down to this external range liquidity here. Okay, so my bias is bearish until the price touches this external range liquidity. Okay, so my weekly bias, I would say, is bearish because price has been respecting bearish PDRAs. Okay, so the weekly is bearish. Now let's go to the daily time frame and see what was the direction of the market during this time. Was it bearish? Was it bullish? This is the weekly fair value gap which we had drawn recently, and price had formed this order block here. Then price broke through it, went down, then came and retested it and respected it, and continue to go lower. That means that the daily time frame is also bearish because price is also respecting the bearish PDRAs. Now that is what we call time frame alignment. We need to align our time frames in order to take our setups. Now that we know the higher time frames are bearish, we're going to look for setups that focus on selling the market till the price reaches this external range liquidity. Let me plot a line here to indicate the week which I traded, which is the previous week. So this was on Monday, 2nd of June, till Friday, which was the 6th of June. Between these two lines is where I took my trades from, not on the DXY or the US dollar index, but other pairs because we don't trade in the DXY. Okay, so this was on a Monday and I analyzed my market on a Sunday before heading on to this week. So when I came to the DXY chart, the daily time frame, now that I know my weekly time frame is bearish and my daily time frame is bearish, I saw this fair value gap here and told myself that I want to see this price break this daily fair value gap here and disrespect it. Then after disrespecting this inversion, this fair value gap here, come back and retest it and then head lower to the external range liquidity. Okay, so that was what I was anticipating going into this particular week. Okay, so Monday formed the bearish candle, disrespected it. I waited for Tuesday because I don't take trades on Monday. I waited for Tuesday to come back and retest it, or any other day, and trade my strategy, that is the candle range theory. Draw the CRT high here and CRT low here. This is the range. Okay, so wait for the next day to take out the range high to turtle so here, and then get a confirmation or entry model to trade down to the CRT low, and my first take profit is the half of this range, the Tuesday candle, as you can see here. So that is how we trade the candle range theory. So simple and easy. Okay, so this is the DXY chart, and going into this week, I knew the price will be bearish. So after forming all this and after breaking this fair value gap, disrespecting it, coming to retest it again, I anticipated that the DXY is going to be bearish. Okay, now let's head on to the EURUSD chart because that is the pair which I traded during this particular week. We are now in the EURUSD weekly chart. So this is the weekly chart, and as you can see here, previously we said that the DXY is bearish, so meaning that the EURUSD is going to be bullish because the US dollar index in the, let me just write it here so that you might understand easily. In the EURUSD currency pair, the USD is the quote currency. The quote currency is the last currency in a currency pair. So the USD is the second currency, meaning that if the DXY is bearish, the DXY is also called the US dollar index. That means that it is weak, and if it is weak, it means it's going to go down. And the euro, on the other hand, is going to go up because it is the strongest pair, meaning that the Euro USD is going to be bullish. So going into this week, let me plot the week which I trade. That's the week which I analyze my setups. So going on to this week, now let's assume we are in this week, this bearish candle. Now going into this week, I knew that price is going to be bullish and head to this external range liquidity up, because initially it tapped the weekly fair value close to the week and formed a very bullish engulf candlestick here, indicating that price is willing to head to this external range liquidity and it's going to be bullish. So going on to the daily time frame, the weekly time frame I've seen it's bullish. In the daily time frame, now this pink line here is the beginning of the week which I started trading, which was on a Monday. Now going on to this week, I was analyzing my setups and my charts on Sunday. So going on to this week, I know that this price is going to be bullish, and I waited for Monday to form and tell me a story. What's the market going to do? What does the market want to do? Okay, so after forming this bullish candle and forming this break of structure here, it told me we are going to be bullish through this whole week. Okay, so I waited for Monday to form. It formed a bullish engulfing candle here. Then I was anticipating for a retracement to. Okay, so we have this low here, and we are going to plot the high on the Monday candle, assuming this data right of the Monday candle is not. So I plotted my gun box here showing the premium area and the discount zone. Going on to Tuesday, I anticipated that price should come to my discount level here below the 0.5 line and tap this PDRA here, this inversion fair value gap, as you can see here. Okay, and we also have an order block here and another order block here. So those are my discount arrays which I anticipated price to touch, then continue going higher. Okay, so on a Tuesday, price came and formed this bearish candle, but it did not touch this inversion fair value gap yet. So I anticipated that on a Wednesday, price is going to break this, to turtle through this Tuesday low here, then touch the inversion fair value gap and eventually give me an entry model so that I can buy this. Now, we have our analysis on the daily time frame. Now let's head on to the 1 hour time frame to see how it played out. Okay, so here is the 1 hour time frame. This is the Tuesday low of the week. Now Wednesday it broke the Tuesday low of the week. It turtle souped and touched this inversion fair value gap. So after touching this inversion fair value gap, it gave me an SMT with this correlated pair, which is the GBP USD. The GBP USD here, it formed a higher low. It did not form a lower low like the Euro USD, meaning this is an SMT between the GBP USD and the Euro USD. So that was an extra confirmation that the price is going to be a little bit. So my first entry was at this line here, this Tuesday low, because I knew that prices will come, and then I placed my buy limit there. So price came and turtle souped and gave me. Then I was in the market. Now, my legit entry, that was just an aggressive trade. My legit entry was, I was anticipating that price is to give me a market structure shift here, together with this CISD here, where I wanted to take my entries for my legit entries, not that aggressive trade. Okay, don't always try taking aggressive trades. Just be patient with the market. The market will give. uh, gave me a market structure shift here, and this bearish candles here, it gave me a CISD. My other entry was on this fair value gap here, this small fair value gap you see here. So that was my, and I was targeting this external range liquidity at the daily high. You can see we have the daily CRT low here and the daily CRT high. But as I told you, my first take profit is the half level, the 0. So that was my first profit. Those are the two entries that I took. And another entry which I took, I went to the 4 time frame, and then in the 4 time frame, I saw this fair here. So this 4 I waited for price to disrespect it. As I said earlier, if price disrespects a fair value gap, it has a tendency to return to that value gap and retest it and continue to. Okay, so price broke this 4 value gap and then came and retested it, and this is where I took my. Okay, this here my trading strategy. We have that CRT here. As you can see, the 4-hour CRT low and the 4-hour CRT high. Price that will suit this range low, tapped on the inversion fair value, then start no trade. If I do my analysis in the 4-hour time frame, my entry is always in the 15 minutes time frame. So let's see the end I took on that 4-hour inversion fair value gap. The 4-hour inversion fair value gap, as you see here, and price touched it and gave me an SMT, the GBP. Let me show you. As you can see, we have this here. Price formed a low here in the Euro USD, but in the GBP USD, it formed a higher low. So that is an SMT. That's an extra confirmation. So after seeing that SMT, I immediately took a buy trade, a couple of buy trades from there, and I'm just in a minute. After taking the third entry, for the same way I waited for a CISD down here. So price gave me a market structure shift with a very huge displacement candle returned, and that is where I took my entries from and targeted this external range liquidity here. But my first take profit in this particular setup, this 4-hour inversion fair value gap, it was the half level. Then my second take profit was the CRT high, and the third was the daily CRT high. In this setup, I also took some from here. This was a fair value gap which I anticipated that price is going to respect, because prices had been respecting some bullish PDI rates down here. So I anticipated that price is going to respect here this fair value gap here and continue to go higher. Yeah, so that's how I took my trades. On the right side of the screen, you can see a short clip of the trades I took last week while I was trading this setup that I've shown you, from the internal range liquidity, the inversion fair value gap, to the external range liquidity. I have come to the end of the video because I don't want the video to be that long and tiresome for you guys. Whatever I've talked about in this video, if you're finding it hard to understand the concept that I've just said, kindly comment down below and I'll be glad to assist you and also make a detailed video on it. You can also post any video suggestions that you want me to make in the future, and I'll appreciate and be of help to you guys. Don't forget to hit that subscribe button and share the video to your friends. Let's grow together.